Welcome to the Dairy News and Views podcast, a production of the Iowa State University Extension and Outreach Dairy Team. Our podcast covers current educational, research, and industry tools available for your operation to manage healthy cows and calves while producing the highest quality dairy products.
Well, thank you very much. I always like to start with a good joke. Good is going to be relative today, so I'll let you guys decide. But I did recently learn that dogs can't have MRIs, but cats can. Hey, we got a fan over here. That's good to see. And also right now, if you do need a beverage or a drink or anything like this, it might be a good time because unlike this joke, there is no punchline. So, hey, 2 for 2 over here. This side of the room, we'll work on it. We'll work on it. Go ahead and take out your phones here quick. And scan that for me. If you do the one in the printout, it might take you a little different path, but you'll all end up there eventually. What I just did is tricked you into taking an evaluation. You're welcome. But actually there is a big purpose for this. One is that it's great to know the makeup of the audience so that way we can make sure we're targeting our information, our research, our outreach towards the appropriate people, right? The second is that at the very end, you'll be asked if there's other things. You don't have to put it away knowing it's an evaluation. It's all right. Is that at the very end, we ask if you have any additional questions, right? The big thing that we take away from that is research questions, right? If there's topics, things of interest that you guys have that we're not covering or you're not getting information on, we love to know that. So I partner with all of the agricultural economists across the U.S. That sounds like a lot, but there's really only like 3 or 4 of us. But we meet regularly, right? And we take a lot of the feedback that we get from groups just like yourselves, go through it, right? And then say, hey, where are the gaps? How can we, improve more, right? So a lot of that stuff you'll see in Hordes, Progressive Dairy, all of these different venues and outlets, right? So very important. It really does guide our work a lot, and we really do appreciate that. So if you can take the minute or so to do that, greatly appreciated. So I want to get an idea of the breakup of the room here. Let's go lenders, producers. Let's cluster the rest, other service providers, somebody that doesn't fall into those 2 groups. Perfect. Care to share? Perfect. Cool. What I want to do, so supply and demand, right? We're finding the balance. And right now that really kind of is where we're at in the dairy industry, is just finding this balance, right? My next slide, I want to take a little different approach today because I want to make sure we're targeting towards what your interests and questions are. But we're just going to go through kind of the hit list of what's going on in the industry right now, right? But before I do that, I don't want to give it away. I want to know, what are you guys interested in? What are you seeing? What questions do you have, right? When you're out talking with folks, what are people talking about? Timeline. One more time, what? Timeline. How good is it going to be for how long? That's a great question. We have some insights, no definitive, but we'll get on that. Mark, we talked about some stuff earlier. What was one of them? Prices in general. Yep. Expansion. Anybody here? Expansion not only on the farm level, but like industry-wide. What that's looking like, kind of matches the timeline, some of the processing stuff. What else? Succession. Later in the day. I'm not a big succession guy, but definitely a big topic, and that does tie with timeline, right? So, I'm glad you brought that up. Do you want to hear something interesting? There was a research project done out of Michigan State that looked at success of farm transition, right? Was it diversification? Was it milk production? Was it whatever, right? Any guesses as to what the biggest predictor, or like the biggest, maybe not predictor, but factor was in the success of a farm transition? Somewhat. Any other guesses? Luck. If you hit your timelines close enough, if you were lucky enough to pick when you transitioned or when you expanded, right? and if the market was generous or favorable enough to you during those timelines, right? So, my great-grandfather was known for saying you make your own luck, right? So, prior preparation, I'll leave the rest. But I think maybe we can make some informed decisions on some of the economics fundamentally, right? But I did think that was kind of an interesting study that they put some attention on. So, anything else? Perfect. Everybody raise your right hand. All right, you can put that one down. Raise your left. You can use either of these two to ask a question at any time throughout the presentation, and I encourage you to do so. So, anything else before we kind of jump into the hit list and go from there? Perfect. So, this is kind of the biggest themes that I see right now that are going on. So, right now is very interesting in that we came from a period where we had high prices, right? Who remembers $25 milk? Maybe not on your check, but in general. You know, a year or so ago, we hit that, right? Who remembers $15 milk? Not as long ago as what it feels like sometimes, right? So, we went from 15 to 25, right? During that time, when we saw those recent low prices, well, maybe not recent, but 9, 12 months ago-ish, right? When we were at this time, we didn't know that it was going to get as low as it did, right? When we were sitting more or less right here last year. When we hit that low and we were coming back out of that, right? We either needed supply to adjust or demand to change, right? Anybody know which one of those two mostly led to us getting out of those really low prices? Supply, right? In order to, as they say, low prices cure low prices, high prices cure high prices, right? Our low prices, we started to see that change in supply response as we slowly ratcheted down production, right? What was interesting about that supply response is that it was not as rapid as we would expect. Why do you think that is? Somebody said, I didn't hear it. Some expansion, but also we have been getting so efficient and so well managed, right, that normally when that supply response changes, where does that come from in the market? Does it come from your highest producing or your most efficient or your least efficient? Least efficient, right? Our average efficiency in production and dairy is continually getting higher and higher, right? What does that mean? It means that the bottom is not there that is the easy weed out anymore, right? Because of that, our supply responses seem to be slower than they used to be. Interesting, right? We did see a little bit of demand come back, but then as that happened, right, we've still been chasing demand. Demand is the big underlying question right now across all of dairy, is will it continue to maintain or increase to the level we need to support our prices, right? So right now is one of the very few times in recent history where there is talk in the entire supply chain of we have tight supply and tight demand, right? Very seldom do those two things go together, all right? So the way that I describe it or think about it right now is that we had, in these periods of low prices, all these different pieces and factors just kind of hit the floor, right? Right now, we're picking them up and we're holding them, and we have not seen what all those puzzle pieces look like yet, right? We're just kind of, we made it over the edge of the lifeboat. We're sitting in there and waiting to see what's going to happen, right? That's where we're at right now across the entire dairy complex. So that's kind of this stuff, is this supply concerns, at the same time demand concerns. I heard somebody talk about it earlier. How many people have heard anything about heifers recently? Right? What's the big story there that people talk about? Heifer prices because of what? Shortage. Full disclosure, I'll take a bit of a contrarian view in that, because when those numbers that came out that said, right, earlier this year they said, hey, we're short on heifers. We had, if you go back a year from that date, We were already short on heifers then, right? Was anybody talking about it? No, right? The one thing that is going to work in the producer's favor is that we're not able to flip that switch as fast to bring more cows in, to expand, right, if we need to. Here's the reason I'm a bit contrarian on that is, well, two things. First of all, who can do basic math or has a calculator? What do you guys figure is your feed price per day for heifers? Or your total cost, sorry, per day to raise an animal? Throw a number out. The number I use is like $3.50 a day total cost, right? So let's take $3.50 a day. How many days are they on feed? Let's take 700 times that. What do you get? What's your number? What is it? $24.50. All right. Let's round up. Let's go $2,500, right? $2,500 just in cost for that heifer, right? If they're selling on the market for what? What's our price? What are we seeing?
Maybe 1,800.
Maybe 18, maybe 2,000, maybe 25, right? Around us, there was a sale somewhere around 3. Let's round up and say 3. What's that premium or margin on that? $500, right? Let's look at calves that are black, that go to market. What's the check on that? $500 to $900. Our area, we've topped 1,000. What's your cost into that? Unit of semen. Let's call it a day's worth of overhead, right? Maybe a week. Which premium's better? The calves, right? My view, I think it's hard to say that we're short on heifers. I think producers figured out feeding heifers is an expensive proposition. We're not going to raise extra, right? Because that's our trade-off cost. Is either we breed sex semen, we make sure we get a terminal bred animal. That seems to be a better value proposition than raising out extra heifers, right? So while if you're writing out that check to buy heifers may seem like a lot, I'm not overly convinced that the premium, right, for raising heifers is there comparable to your next best alternative, right? That's one of my reasons for that argument. Second is, how many people in here have heard of any dairy producer who deliberately shorted themselves heifers for the replacements they needed? Feel free to raise your hand. You did? One? That's the second herd I've heard of out of many, right? I don't think that's an overly common thing, right? So I think producers are getting pretty dialed in on the heifers they need, their management practices, right? All of these things. So I'm not overly convinced that there's that heifer shortage. I will admit there's probably fewer in the market than there once was. Openly say that. Writing out the check for them, not as much fun as it once was. Openly admit that, right? But to say that, there's this big, huge issue or problem that like dairy's going to be completely stunted because we don't have enough heifers, I'm not convinced of that, right? Also, I think, timeline, I think we're going to see some expansion come the end of this year, beginning of next year. Why? Because these dairies, I generally speak larger. When I say larger, 3,000 to 5,000 cows and above, right? They're planning for that, right? And they have been planning for that, and they've been planning their heifer inventories accordingly, right? We'll see in a little bit, there's a lot of processing coming online. Right around, last calculation, about $8 billion, right? Somewhere between that, $7 to $8 billion across the whole U.S. If that's the case, and you're a plant, and you're investing any kind of sizable resources, are you just going to take a chance on if you build it, they will come as far as your milk supply, or do you think you're going to have some of that prearranged? I think you're going to have some of that prearranged, right? So I think the big wild card right now is what's going to happen once all this processing comes online in the next 2 years, right? Because if a lot of the milk that is going to be allocated for that is already prearranged, we're not going to be pulling off the open market, right? The reason we saw a recent bump in Class 3 price was because we had to pull some milk from the open market because cheese plants weren't running at capacity in certain parts of the US because milk was physically being allocated to class 4, butter versus cheese, right? For one of the first times in physical movement of milk, widespread, maybe ever, right? Not very common. Cheese plants, they want to run full, right? They make sure they run full. We weren't seeing that. That's why we had that recent, not this most recent, but previous to that, like a month ago-ish, that's why we had that bump in class 3, right? So that's where I like that question of timeline, because what's going to happen? If we have this processing coming online, people are already planning for that, and we put more product into the market, what does that mean for demand? Does it have to stay the same, go up or down? I think, not to give away the ending, I think there's adequate reasons to start looking at risk management for end of 24, first quarter, second quarter, 2025. I do think we're going to be trading on some news in the recent future here, right, that could offer some price protection bumps. A lot of the movement that we've seen recently isn't inherently large fundamentals, they're small fundamentals moving along. And also, because of that, our implied volatility has increased recently. If our implied volatility goes up, anybody that trades knows you sell on volatility, right? Could be some pricing options coming up, right? I use the word options, it's a tricky one. You know, market tool option, but also I mean opportunity, right? So keep that in mind. We talked about beef on dairy a little bit. Also, as this average of efficiency, right, increases across the whole dairy sector, what does that mean for fat and protein production across the entire industry? Guesses. Is it going up or is it going down? Up, right? If our components are going up, our efficiency is going up, right? That also means that it leads to generally more competitiveness in the marketplace, right? Because the more efficient operations are obviously going to do better, make more money than the non-efficient ones. What does that lead to? It's in small print, I realize, but consolidation, right? I think our rate of consolidation over the next 5 to 10 years is going to increase compared to what we've seen historically. And historically, that has been progressing faster than some would like already, right? But I think all of these factors are going to make that happen even faster. A lot of this too, how many people, I assume we're a predominantly cheese area here where milk flows to, is that correct? Have you seen a difference in class 3 price and class 4 price on the farm level based on where your milk is going recently? It's a trick question. The answer is yes. Sometimes that difference can be huge when it comes to the farm level mailbox price. All right? So we'll dive into that a little bit. We talked about the large investment in dairy processing. Again, demand lackluster at best. We've been surprisingly, at least for me, chugging along. That's a good thing. Exports, we'll dive into that a little bit. And high path, HPAI, highly pathogenic avian influenza. I think that will rip the Band-Aid off of that quick and get into it. I think that's probably our next best place to go. So these are numbers as of, I pulled up the number yesterday and I put it in, but it didn't make it into this slide. So my apologies there, but for our recent cases. But the big thing here is that on a macro level, right, we have not seen HPAI make any market moves in supply, right? So we have not seen this impact any, let's say, market fundamentals, right? Part of the reason for this is that when you take the whole US dairy industry, dairy herd, milk production, and you take a percent of that and you multiply it by another percent of it and you multiply it by another percent, you get a small number, right? That's what we're seeing. Does that mean that if a herd gets it, that it's no big deal? No, certainly not. I don't want to belittle that, right? We did some economic impact analysis when this first came out, and there is definitely a farm level impact implication, right? But in aggregate, until it's fairly widespread, I don't expect that it's going to move the market, right? It could maybe trade on some news. We might get a bump if there seems to be a large spike in cases, but overall, I think it's going to be hard to say that we're going to get, this huge widespread response from it. the one of the reasons for that is the old adage of like, hey, if you have the flu, you can either be sick for 14 days or 2 weeks, right? Those are your options. That's kind of the same with this. So that, like, not to throw our hands up and like pass over it, but like as far as the economist in me, that's more or less where we're at, right? So, but with that, of course, there's some few resources on, biosecurity measures, all of these sorts of things. I do believe that's in your handout if anybody's interested. I will openly say, not a biologist. Contact somebody that knows more about those specifics if you're interested in them. But from the economic side, that's where we're at. Show of hands, how many people have a refrigerator at home? Anybody not? Okay, so in your refrigerator, how many people have some food item in there? Awesome. How many people have a food item in there that has some sort of sustainability, carbon, what have you claim on it? How many people have bought something at a grocery store with those claims, metrics, labeling? I really appreciate that, right? Because right now, we're not seeing the willingness to pay for that, right? So, what I think the most likely path for this is that it'll fall under this category of what I call like social license to operate, right? How many people know the farm program? I think it'll end up being something like that, right? Where it will just, some of these measures will be included in that, social license to operate, right? So part of this reason for the willingness to pay, most agricultural commodity type products, there's been a lot of research on this, but like the ones that I've been a part of, Michigan State did willingness to pay for different attributes for products. We did pork, chicken, beef, grass-fed beef, right? So cage-free eggs, gestation crates for sows, grass-fed beef, right? And did this large willingness to pay study for consumers and what they're willing to pay, how much more they're willing to pay, all of this, right? The big takeaway from that is most of people's willingness to pay is directly attributed to their income level, right? So, higher your income, more willingness to pay for attributes. What does that also assume? It assumes that there's a large enough market segment that have that expendable income to spend on these things to make that decision. What happened recently, right? What was the biggest reason for our interest rate rise? Begins with an I. Inflation, right? If consumers don't have that expendable income when they go to the grocery store to purchase these food products, right? Do you think that's going to have more or less pressure on food products that have these additional attributes? Raises the pressure on those, right? Is there still going to be a market? I think there's always going to be a market. Is it going to be a widespread thing that people are willing to pay additional money for? I think that's going to be a big ask, right? I think, I know like in the South and Southwest, there's certain food processor companies that look for exclusive supply contracts where they're, saying, hey, we're getting milk from these dairies, and if you're going to supply our milk to us, you have to do XYZ thing, right? But I think we're a ways away from a developed market, right, where there's an actual exchange and pay price for this, quantitative sort of management or measurement thing, So also with that, a lot of the incentives for these, let's say, green investments, right, whether that's methane or digesters or any of these, right, a lot of those, that time period for that initial investment has sunsetted for a lot of the government subsidy and support. So a lot of those are coming online, but until there's new money in some of those pools, I think it might be hard to see that same amount of investment going in. So this is my big push, plea, hope for the industry, is that, so there's like the scope of this, right? There's farm level, industry level, whatever, right? Anybody here recently, the SEC filing ruling that came out right after the first of the year, I believe, we get some nods, that said that basically, correct. Agriculture didn't have to be included in that, which is good for agriculture, because if it did, then we go under SEC rules and regulations, which is very different than rules and regulations that we have now, right? So I do think that, you know, like you're saying, there may be additional requirements, especially on the processor side, all of this. My big hope plea for the industry is that, let's think about almonds. Almonds, right? What's the big product now? Almond milk, almond yogurt, almond whatever, right? What's the byproduct from that? The hulls. If dairy didn't take those hulls, it would be really hard to have an almond industry, right? Is that dairy, we need to work collectively to make sure that we're getting credit for these ancillary things that we are doing, right? And capturing that value, not only the individual farm level stuff, and capturing the additional value from new practices, right? Like alfalfa. If you have alfalfa, because you're dairying, does that capture more or less, right, carbon than corn or beans? More, right? What does that mean? It means that we probably should get getting additional credit for having alfalfa, right? Also, I hope that we go to this per hundredweight unit measurement of a lot of these emission things. Why is that? Because we're seeing, and this is out of Cornell, dairy scientists there, any guesses on the most efficient per unit of hundredweight on environmental impact? Which type of feeding system or dairy operating system has the lowest per hundredweight impact? What's your guess? It's a poorly worded question, but throw something out there. You would think pasture, right? Confinement. Why? As you get higher energy rations, you get lower methane emissions per unit of milk produced, right? I realize there's a lot of folks that don't enjoy that, but that's where the science is showing us at the moment, right? So that means that some operations that may have had a target previously of being high environmental impact, right? We're finding, hey, maybe not, right? So I think there's still a lot of development that needs to happen. Do I think that just a flip will switch and we're going to have this, you know, additional value across all producers from these environmental things? Might be a big ask at the moment. You know. Also, where is a lot of these installations and capture of those programs going? Which size operations? Small or large? Larger, generally speaking, because they need the volume of product in order to put into their systems, right, in order to make the economics work to do this. So kind of some of the big takeaways that I've been seeing on that. We spoke on this a little bit before on the supply side. That's where a lot of our changes have been happening. Some of this came through our decrease in cow numbers. 2023, been going down, saw this blip up, and we've slowly been coming back down again, right? Let's take a look here. What's very fascinating to me is that we're at 2024, and we have our cow numbers are about where they are at 2019. I'm going to pick on you. Is that fine? So I want you to remember this. Right now, we're closer to where we were in 2019, remember that year, than we were in some of our previous years. All right. So now if we take a look at milk production per cow, we're more or less still in line with where we've always been. So even throughout this year, some months were even higher than where we've been, right? If we take a look at where our U.S. milk production is, what was our year we were looking for? Well, that's not on here. Let's go 2020. We'll come back to 2019, don't worry. So, U.S. milk production year over year, we're more or less in range where we've been the entire time. Maybe at the bottom part of that range a little bit, but more or less, right? So that means our supply response hasn't been huge, right? Like I say, it's just this been slow ratcheting down until we finally hit a point where the market says, oh, we realize that we're tight on milk right now, right? That's what happened a month or two ago. You can find 2019 now, right? So this is our cow slaughter. This does not surprise me that our cow slaughter numbers have been down. Why? Because we're already really focused on efficiency, right? I don't think our DMB pens are all that full because we got such high beef prices, right? I think a lot of the inefficient cows had been weeded out through that really low time period of high feed prices coupled with low milk prices, right? So it doesn't surprise me that we might be hanging on to cows a little bit longer, but I do think they're still, generally speaking, we're still quite efficient. This is that dairy heifer thing, and this is why. So we have our beef semen sales here and our dairy semen sales there. Seems like they're fairly closely matched, right? So this kind of goes back to that story of, are we short on heifers, or did we just find a better opportunity cost for that cow and that lactation period? Now, for the lenders in the room, you might find this kind of interesting. This is some work done by Dr. Chuck Nicholson at Madison, where he took and looked at price cycles for milk price cycles over, since 16, right? And we do see this general U-shaped pattern. Where are we right now? We've come out of that bottom and we're kind of right around this, this trough of potential higher prices in the future. I say potential because this is observations from the past, not a rule for the future, right? So I do think it's very interesting. I think there's some validity to it for sure. But if I go to my lender and I say, hey, I show them this graph and I say, hey, everything to the right of this shows we're going up, are they going to be 100% willing and say, yep, you're right, here's a bunch of money? Probably not, right? So I think this is maybe a good indicator, right, of what could happen based on previous cycles, but again, not a 100% rule. The big thing on this is, let's take a look at some of the volatility here. Our maximum amplitude is almost $11 per hundredweight. Our minimum is 7, right? I think we're going to see these highs and lows, right, continue or get larger, right? So, and also when we think about what makes a good year, this is from, not the tire, but for dairy pricing. This is from Cornell, where they have a pretty good set of farm financial records. And if you go back, this goes back to 2000. And if you look at what makes a good year, average year, and bad year, we're going to have 2 or 3 slides on this. A good year, your average return on assets, 10%. Poor year, 1%, right? We were talking about consolidation before. On a good year, we lose 2.8% of farms. Average 4, bad 4.7, right? I was surprised that this wasn't greater, to be honest. But I do think that's very interesting, and I wouldn't be surprised if we see these numbers increase some as well. Now, what does it take from a market standpoint in order to make a good year or a bad year? The big thing, exports, right? As we continue to export a larger percent of our production, we continually need more exports, right? Double-edged sword, because that's where our high prices come from, but also a lot of times that's where our low prices come from, right? So if we need a good year, we need good exports, right? Historically, for milk supply, does anybody know historically, like through most of my lifetime, how much our milk supply changed year over year? Like what the average was, just rule of thumb. Any guesses? Somebody said a number. 1%. 2. We could plan on 2% increase year over year, and the market would absorb it. Where did most of that absorption go to? What product? Cheese, right? So if because the demand for that was growing. If our demand for cheese is more or less stagnant now, that's what we're seeing. I'm not saying it's that way forever, right? But domestically, that's where we've been the last few months here. That traditional 2% rule could even change, right? So, this is what we were, let's say $19.50 for a good milk price, $14.50 for a bad milk price. Milk supply, on a good year, we were below a 1% increase. On a bad year, we were just over 2%. It's a pretty tight band right there between a good year and a bad year in milk production, right? And again, if we just graph milk price with exports, I don't know about you, but I would say that those two lines seem to be fairly closely related. So, and then same here, if we look at milk price and stocks, very much sort of that same trend. We talked about this a little bit, processing capacity coming online. My estimate right now is we're right around that $8 billion mark as far as total investment in processing happening across the US. The last count, back of the envelope math, was that we would have a 2% increase in cheese production. And since that announcement, I do believe there's been another cheese plant slated that wasn't in there, right? So if we're increasing our cheese product total output by at least 2%, there's a fair bit of butter in here. There's some fluid happening around here too, especially down in this area here. And New York, I believe, had a new fluid from right here from Fairlife that's going to be fairly sizable, it sounds like. So if we're increasing our output again, right, and if a lot of that milk is already accounted for in some way, shape, or form and we're not pulling, I think there's a significant argument to be made. Price pressures could be coming in the future, right? So we talked about this a little bit, but components. This is average US for the entire herd year over year. Regular basis, higher, higher, higher. That same dairy economist or dairy scientist out of Cornell that that did the research on the methane production per unit of hundredweight, he said that he believes within his lifetime, if not mine, we'll see that hit or break 5. Right? So absolutely incredible. Pretty soon he goes, yeah, we'll have to redo our milking systems because it'll come out as yogurt. So I think it'll be fascinating to see that. Also, I mean, protein, the exact same story, right? What I did is I just took the math. This isn't actual, this is calculated, right? I just said, we have this much production out there. This is our fat percent, this is our protein percent. Let's multiply them out and figure out our solids, right? There's a chord there. It's the next presenter. Right here. This is what we're looking at. What's happened to our solids production? Even with less cows, less milk, solids are still higher, right? What were some of the factors that led producers to keep pushing solids recently? What were processors implementing? Cheese yield. I know we were talking before, I know there's processors that are going cheese yield. Some are going, hey, we're going to have, we'll choose our words carefully, a market allocation that says you can ship X amount of milk, right? A lot of them started with X amount of hundredweights. If you can sell X amount of hundredweights, what do you want to do? Make sure you're selling those components in those hundredweights, right? Since then, we've seen this shift from hundredweights to pounds of production, right? They'll say, we'll take X amount of pounds of fat, X amount of pounds of protein, right? Above that, you're going to get paid less, right? So I think there's been a lot of factors that are driving that incentive to increase those pounds of production in components, right? Even as we've ratcheted down our cow numbers. Now, when we take a look at where most of our milk is being allocated, if we take a look at milk fat, I don't think this is a surprise to anybody that we have most of it in cheese followed by butter and then fluid, right? I don't have a slide on this, but who can guess what our per capita consumption of dairy product has been? Has it been increasing, decreasing, or staying the same over time? Increasing. Yup. Almost all of that increase in per capita consumption of dairy has come from the processed side, right? Not fluid, right? Not that gallon of milk you drink, but in this, processed cheese, butter, things like this, right? Right now, at last count, right around the first of the year, something like this, we were at like 3.5 8-ounce glasses of milk per day per person in the US. The rest of the world is at 1 8-ounce glass, right? One very interesting thing that we're seeing is that in aggregate for world demand, we're seeing a lot of countries increasing that at the moment, right? There seems to be a fairly strong demand for like high protein products in the rest of the world, right? I just heard this week one of the new market spaces that are being invested in, I think Nestle has come out with it, is a high protein drink for toddlers. So we went from, it used to be the gym rats, right? After your workout, you'd have chocolate milk or, then the Fairlife stuff, and then the high protein shakes and powders and all this. And now they're finding a new demographic in toddlers to have some of these products too. So kind of interesting. I don't think this is a surprise to anybody. Our class 3 price and our class 4 price. This recent bump again was, in my opinion at least, news because we were getting tight on supply for cheese, right? So I'll take it. The big question here is when will this meet or invert, right? Because it's been a long time since class 3 was above class 4. So that's kind of the big question at the moment. I have been asked before more than once, hey, we're looking at changing processors from a class 3 processor to class 4 processor. Should we do it? I have no answers, but it seems like this class 4 has definitely held on for a long time, right? The thing with class 4 butter is that the price transmission of that is not as clear as it is in a lot of the cheese market or the rest of the class 3 market, because a lot of our butter sales have been entering people's carts in the grocery store because of promotions. Right now, especially in the last 2 months or so, a lot of our product is clearing the market because of promotions. Not only butter, but cheese as well. Anybody hear the Chili's promotion recently? They had like 2 for 3 deal or something like this, right? A lot of our product is going through a lot of these, whether it's grocery store channel or restaurant chains or what have you, through a lot of their promotions to get people in the door, right? So anybody follow the McDonald's stuff? $18 for a meal deal now, right? So, and I see the look on your face. You seem a little shocked by that. Yeah, so they hit $18 and then they're like, hey, this might be too high. We need to find a cheaper way to get fast food and people to come in the door to buy it, right? So that's that big push, right, that we can use our product for a lot of these promotional things. So I want to hit just a few highlights here, and then we'll get to some of the forecast and price stuff. Cheese exports. We booked a lot of exports early in the year. Do we know, anybody know why we booked exports? Our price was that much lower than the rest of the world, right? If our price, in order to book exports right now, solely has to be on price competitiveness. At one point in time, we could book exports because we could wave our hand and say, hey, we have product when other people don't. We're a steady supplier, our quality is consistent, you say you want it, we have it, right? Now, the rest of the world is like, hey, we can get it anywhere, we have to pick the cheapest, right? Also, what's our disadvantage compared to the rest of the world? Location. So we have to be the lowest, plus have all of our slippage, logistics, transportation included in that, right? So if that's the way that we need to get a higher milk price, it's going to be a little competitive, right? Also, what COVID did for the dairy industry was said, hey, these international buyers, they were managing their inventory. They were like, hey, we don't want zero inventory. We want to make sure we have enough on hand all the time, all right? What did that mean? That meant they were buying regularly, they were buying in advance, they didn't mind holding, right? Now we're not seeing that. When they raise their hand, they want it because they're keeping their inventory lighter, right? Our shipping and all this stuff has come through a little bit more, right? There was just recent news that in some of the ports in the US that there's some of the dock strikes might be happening again. If that does happen, that might lead to some port congestion in the US. If that does happen, that may not be great for US dairy because there's a lot of international competitors right now that are happy to say, we'll sell you product. So that timeline is about October range right now. So if we can, the bad part about that is that we booked a lot of these early in the year. Right now, anecdotal evidence says we're not booking. So if we're not booking and we have export trouble domestically, just infrastructure-wise, it could be hard for us to move product this fall, early winter. This is what I mean on our export sales. We booked product when our price was low, right? And in almost all of our NDPSR graphs, we see pretty much that same trend over and over again. So right here for our barrels, our price went up. What happened to our volume? Came right down, right? Let's get to, so I took the liberty of just mapping out milk price for you. Our 2019 guide, there's a quiz on this afterwards, so make sure your memory is on point. I think right now, as far as cheese goes, I would say we're red, if not yellow, right? If you think about it like a stoplight sort of thing, because we're getting so much cheese production online. Our inventories, I think once we start building any kind of inventory, we're going to see that pretty heavy drop. And that's our yellow right here. I'm going to put green on cheese sales because domestically, surprisingly, we've held on, right? And we booked exports. But if exports dry up a little bit or grocers or retailers decide not to run promotions, I think we could easily see this slow down. So that's where I think right now, I think we'll stay range bound, right? That 18, 20s, we seem to have a hard time breaking and staying above 20 for an extended period, but I think we're going to stay around that range probably through summer into fall, all else equal, right? Let's take a look at butter quick and we'll get to some other stuff. Butter production has been good and it's going to increase, right? Exports and butter really aren't a big deal. When we do get good exports for butter, it's because nobody else in the world has product. So people come to us for butter when nobody else is left raising their hand saying that we have product for you. And domestically, we've been staying strong, but that's why here, even as our price rises, it doesn't really seem to matter because most of it is domestic. This right here is where we saw a lot of exports. That's what pushed this peak in price, was when we said, hey, in the US, we have product when nobody else did. Let's get to our pricing again. I think butter production is our wild card right now. I think as soon as we see any inventory build, that class 3 price, because the price transmission in that is not as clear as what it is in class 3, I think there could be a lot of news that happens rapidly to move that price, right? So far, if we can keep hanging on and we keep going, I see no reason why it would change. If we do get some of that information in, I think you could see a change rather quickly. So right now, there's going to be more, I'd say, green to yellow on the butter side than what we did see on the cheese side. When we take a look at our worldview here, let's look at Mexico. Mexico is by far one of our best friends when it comes to moving product, right? What happened in Mexico recently? New president. What happened when they got a new president? Currency collapsed. They lost, I believe it was like 8% of their purchasing power, something like this. So if Mexico lost a lot of their purchasing power, and previously, during our high inflation period, they were keeping up, right? So we didn't see a lot of change in their buying, right, throughout all of our, let's say, more turbulent times. But if their purchasing power went way down and they're one of our biggest trading partners, that would be pretty interesting, right? Also, in a more macro view, there's been some talk that Mexico wants to increase their domestic production and supply of dairy product. If that's the case, and they're our biggest trading partner, I'm not certain that exactly supports a thesis that our prices are going to remain high for a long time. The argument there is that, hey, it could take a long time for them to get everything online and up and running. Fair enough. But we have seen in other countries on the other side of the pond take the exact same initiative, right, and increase way faster than we expected. So we'll see. The other big question here is China. They take a lot of our powdered product. Our whole Asian market is about 32%. This is on average over a 5-year period. But the big thing there is they're buying, right? The good news, well, it's double-edged sword, mixed bag, kind of with everything right now, is that China's been slowing down. Also, if you look at the, this information is from Matt Gould at EverAg, if you're interested, but when you take a look at their publicly traded dairy companies in China, and you look at their stock prices, they have been beat up. What does that tell you domestically about the Chinese dairy market? Not real strong, right? So if we're not moving as much product there, their general demand isn't as strong, I think that's a tough argument to say that we're going to push a lot of product there in any time soon. The good news is that the rest of the world so far seems to be picking up that slack, right? So if that's the case, then we can net out about even. I think we're probably the best we can hope for in the short term. Percent of U.S. milk solids exported, I mean, it depends on how you want to, just as anything with dairy, it depends on how you want to measure it, on all you want to do, but I mean, we're at 17%. Sometimes, like if you want to figure solids on a different basis, you can be at 16%, but nonetheless, if we have to absorb all of that, it does not look good, right? We need to keep moving product overseas in order to support any kind of price. This is just our world price here, and it's kind of hard to see, but basically, we've finally made it a little bit below world price, and that's really where we need to be kind of across the board, across the dairy complex, in order to move anything. Why has the rest of the world been raising their hand and saying there's product and made it more competitive? We saw a pretty big increase in supply, right? I like to highlight this period because this is what led to our most recent high prices, right? When we saw $25 milk, is because when you go back even further, there was this nice U-shape of the rest of the world decreasing in their production, and we capitalized on that. That was the period when people were talking in the EU, hey, are we going to have enough gas in order to heat ourselves through the winter, right? They were talking about the gas inputs. They were talking about fertilizer inputs. They had some weather events. All of these things made a perfect storm for us to be able to raise our hand and say, hey, we have product, and people are willing to buy it no matter what the price was, right? That's where a lot of our high prices came from. Since then, what have we seen? Fairly steady. At one point in time, it looked like maybe we were shaping up again, but that did not happen, right? So there's a lot of product in the world, and this just kind of shows our changes in exports and production. The production is red. Argentina, obviously they're a player, but they're not anywhere near what the EU, New Zealand, all of these are. So if they're up in production, man, it's hard for us to compete, that's for sure. I'm going to take the last 2 minutes here, and we'll just kind of give you some price ranges and kind of forecast sort of things. One of the big things that I'm sure you guys have seen come through, obviously, is operating and interest rates. I think everybody has burned through any working capital that they had. When they go to take out operatings, they're quite a bit more than what they were before, right? Historically, we were on an average total interest expense, not P&I, just interest, at about 86 cents per hundredweight. I would not be surprised to see that number increase once we get our next round of data through for last year or where this year is at, right? So the big thing that I bring this up is let's round up to $1. If you're at $1 interest, right, and you look to make any investment change, right, pretty easy for that to creep up rather quickly, right? if you take $1 off the top already, and then if you add anything, you could probably easily add 50 cents to $1 again. Labor cost, the benchmark for that is $3, or yeah, $3 a hundredweight. You could easily be at $5 right off the top before you did anything, right? All you did was pay interest and labor. That doesn't include principal, that doesn't include feed, that doesn't include anything else, right? So I think there's, even if we hold at $20, I think it's a hard argument to say that people are going to be across the board awash in money. And a big reason for that is this right here. This is work done by Mark Stevenson and Chuck Nicholson in Madison that tracks, and this has been updated to 22, but honestly, the numbers and the math are still exactly the same, right? So don't be hung up on the year. There's a $10 per hundredweight spread across operations in cost of production. Doesn't matter the size, doesn't matter the type, doesn't matter the breed, doesn't matter how long they've been in operation. Low-cost producers aren't always low-cost producers. High-cost producers are not always high-cost producers, right? $10 per hundredweight spread in cost of production. Quite large, right? So with that, I do think that because of these non-ubiquitous factors that are happening in the market right now, depends on who you send your milk to, depends on if they're going to cheese or if they're going to butter. Pay price can vary incredibly, right? Look at weather. All these weather factors we're having influences your cost of production wildly, right? I think we're going to see just incredible variance in everything on the farm level for the foreseeable future, right? So that'll make planning easy. I can tell some of the underwriters are very happy to hear that. Forecast, again, this is dairy margin coverage. This takes a look at our 950 coverage level and where we're at in margin up there. As far as DMC goes, they are projecting out that the rest of the year looks fairly good. I think we can hold on through summer to fall, all the way through the rest of the year. I don't know, right? I think there's enough fundamental reasons to say that we could hold. There's also enough fundamental reasons to say there's enough pressure out there that if you're looking to price something, if you're looking to make any sort of risk management decision, probably be thinking about that in the end of 2024, beginning of 2025, right? I like to do this. Don't get confused too much on this. I know there's a lot going on, but we have the big takeaway here is look at class 3 and look at class 4. We talked about this differentiation. If your pay price, right? So this is DMC calculations, but if you took the dairy margin coverage program and instead of using all milk price, you just plugged in your class 3 price and your class 4 price, right? Which means that if you on the farm level sell closer into a class 3 market, and if your program was based on that, you'd have almost $1 a hundredweight in payment, right? Below that $9.50 coverage level, right? If you were based in class 4, 0, right? I think this is just a good indicator or depiction of how much variance there can be on the farm level based on where your milk is getting allocated to and who you're selling to, right? This is just where our class 3 futures are at. As far as cheese goes, I mean, if we're going to get above $2, I don't think that's going to happen very long if it does. We seem to be this $1.80, $1.90 in that range. I think we're going to be incredibly range bound for a long time. Otherwise, we just can't move product. What does that mean for class 3? I think it's going to be incredibly range bound as well because there's just no other option for it at the moment. Class 4, we are seeing a bit more chop in that than what we had historically, but I wouldn't say that we have very great future curves on either of these products, right? So what that means to me is that if there's a pricing opportunity that comes up, you might want to think about taking it. This is just DMC again with that, just a different graph of the same thing. I used to say that we're really treading water. I would say that our milk jug here has made it into the life raft now and is hanging on, but there could be some big waves out in the future that we might want to be thinking about. So again, I think in conclusion, we're going to be fairly range bound on price. I put 25 on there. That might be a stretch. If we get enough of the right things, enough of the right news, we might hit that. But, this 18, 20, 19 mark, I think is where we're at for at least 4 months, maybe a little longer. All else equal, right? And again, if you want to learn more, feel free to send over your evaluations, ask questions.
This institution is an equal opportunity provider. For the full non-discrimination statement or combination inquiries, go to www.extension.iastate.edu/diversity/ext.